Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. My goal is to give you the unbiased price action analysis. Why? So we can cut through the noise and focus on what really matters, which is the price action. Alright, bears think we're gonna drop. Bears think another 20% correction is coming. Bulls think we're going back to all-time high. So much biasm. Alright? So much biasm, but Uncle Charles is a sheep-style trader. That means we don't care to be bullish. We don't care to be bearish. All we care about is volatility. We need volatility so we can get some price action moving so we can make some money. Okay? You take a look at this smaller time. This 15-minute chart. Look what happened Friday. Up and down and round we go. Alright, when we stop the chop, nobody will know. All I'm saying is, guys, anyone who tried to predict this price action probably got cooked and was probably wrong. Alright, bulls were wrong, bears were wrong. Guys, overall, we are freaking chopping. And here's why I don't care to be a bull or a bear. Look at this. You guys know my core trade setups, my main trade setup that I trade, I like to trade with the traps. So that means the false breakouts and the false breakdown setups are my main setups that I trade. Are they 100% trade setups? No, but they are, in my opinion, high accuracy trade setup. Because I am very good at risk management and I take a lot of pride in that, I don't need 100% accuracy. It's impossible to get 100% accuracy, by the way, but I don't need it. I don't need to see the future. All I need is a couple of trade setups that I specialize in, and I do that repetitively, every single day. Okay? So let me show you what I mean. And these were all alerted in my Discord. Please consider joining my Discord if you want more content from Uncle Charles. But let me show you what I mean. Boom. We had a breakout of 440 right here. That's the green trend line. The market opened, bouncing off my 438.5 level. Okay, this level was alerted in the Discord that we had a level there. But I didn't play the bounce because, like I said, false breakouts and false breakdowns. Okay, we had a breakout of 440 here. I did think about entering longs, but I was like, you know what? I'm just gonna strictly play the false breakout, false breakdown setup. Otherwise, I'm just gonna trade NVDA. That was my mindset for Friday, at least. But looky here, we had boom, a false breakout. And it broke back down for 40. False breakout setup. I actually did enter puts on there. It dropped as low as 438.8. Didn't hit my support level. This bounce messed me up. So I was luckily enough, with good risk management to get out on a small green. This bounce messed me up when it did not hit my target. Okay. However, I noticed, and one of my Discord members pointed out as well, Quinlow. Shout out to Quinlow. We had a false breakout setup and it didn't work out well. But look what happened here. Boom. We recaptured 440 right here. That is a false breakdown setup, which I alerted to the group as well. Okay, this false breakdown setup, look at that, led to a beautiful move going as high as 442.64. We had a gap. We had a gap around there. You can see it right here. This is from last Wednesday. We had a gap. It pretty much, it tried to go to the gap. It didn't fill the gap. 442.8 is where the gap is. But it got very close before it rejected. Okay, now remember, we can have resistant levels, but it's not good to call the top. For this play, we did not have to call the top. And if you know Uncle Charles, you know exactly what we did. That's right. If you was in the Discord, you probably played this as well. False breakout setup. False breakout setup. We cleared that 441.5 level and broke back down 441.5. End of day, giving us a nice, beautiful move. Level to level style is so underrated. Came right back down to that 438.5-ish level. End of day. Couldn't break it down. But look at that. Beautiful move to the downside. Beautiful move to the upside. This is why I'm a sheep style trader. Who gives a damn where the market's going to go? All we need is good price action. Good price action setup. A little bit of volatility would help. You're golden. Cut out all the noise. You look at the delta on some in the money contracts on SPY, they're like 45 to 55 cents per contract. One contract, $1.50 move, you be making $40, $50 per contract. You buy 5 of them, buy 10 of them. Obviously, you have to take on more risk, but you'll make more money that way. But level to level style is the safest way. It's underrated. Does not require any prediction, no crystal ball. We're just playing the levels, just the trade setups. Okay? Now, of course, Uncle Charters, besides just helping you guys cut out the noise, I like to identify trade setups and price action behaviors that can validate bullish sentiments or bearish sentiments. I say I'm a sheep, but at the end of the day, I do make these videos for bulls and bears so that you guys will know, not to confirm your bias, unlike some YouTube channels. I don't confirm bias, but I will try to point out how the price action can either confirm your bias or unconfirm your bias. Does that make sense? I'm just an assistant. I'm not no leader. I can't promise you Lamborghinis. Okay? I'm not the leader of the flock. I'm just a fellow sheep trying to follow the shepherd. All right? So, bulls are talking about cup and handle. Bears are talking about double top. The price action will let us know who is correct, not me. All right? So as far as the cup and handle goes, the general rule of thumb for a cup and handle is that the handle doesn't go below the 50% retracement of the cup. All right, guys. So if I take out my support resistance line, you guys can see we had a perfect bounce off my 437 level. Reminder, that is my 1.5 Fibonacci level. Okay, but let's focus on this cup and handle. The handle does not supposed to go past 50% retracement of the cup. And you can see the 50% retracement of the cup is around 437.5-ish. Okay, so right around where my 437 support level is based on a higher time frame. Okay, so overall, the handle is still in play, guys. The handle is still in play. So based on this cup and handle, this is how we know confirmation for either a bull or a bear. If you're a bear, you want SPY to break down 437. Not only does that break down my critical support level from my daily chart based on fib levels, but based on this cup and handle, that's the 50% retracement mark. And if it breaks down, guess what? The cup and handle has been invalidated. It has been canceled, in my opinion. So if you are a bear, you want to short below 437 to 437.5 zone. You want to short below that, targeting lower targets. Okay? So basically what I'm saying is, for Monday, 437 is my equilibrium level. Below that, we are bearish. Above that, we're going to stay long. All right? Now, we're not just going to stay long. We got to look for the right setup. And for me, that right setup, if it can stay above 437 and 438.5, would be another breakout of 440. Now, based on this context, guys, based on this context of the price action lately, it's very likely that if we recapture 440 again, we are likely going to head up higher, test the double top around the June high, and maybe, just maybe, we break that out 444 to get to a new 52-week high. Okay, that's the bull case and the bear case. I'm trying to bring balance to the stock market force here.
You were the chosen one. It was said that you would destroy this Sith, not join them. Bring balance to the force, not leave it in darkness.
So are we clear on what the plan is for the SPY? Give me a thumbs up, a like if you guys understand the plan, or comment below if you want to chat with your uncle. And let me know, is this plan clear? Okay, my goal is to give you unbiased price action analysis. I'm not here to confirm anyone's bias, but what I can do is identify the price action setups that can confirm your bias. Because at the end of the day, price action has the final say. Price action is the shepherd, not Uncle Charters. I'm just a messenger. We're gonna move on to Triple Q. Triple Q have a similar situation with the SPY. With this cup and handle, except the right side of the handle is a lower high. We also have this yellow trend line that we broke down, and it also tested as resistant. So the context is a little bit different for the triple Q. All right. Bulls will probably look at it and say, "Huh, that's still a cup and handle." But bears will look at it how, you know, we got lower high and we got a rejection from this breakdown of the trend line. Okay, so both bulls and bears have, you know, reasons to be bullish and bearish based on the chart for triple Q. But Monday and Tuesday we're gonna need that confirmation, the big C word. All right. Now, like I said, 50% retracement of this cup is at 365. All right. Breakdown 365. We got the loss of 367. That's bearish in my opinion for the short term. But bulls will need to show bears will need to show follow through. Excuse me. Below 367 is bearish for the short term, but bears need to show follow through and break down 365. If that happens, if you're swinging puts, hold on to your puts, or if you're not in puts yet, look to enter some puts with 363.4, 361, and 357.5 in play. Remember, below 365, cup and handle is canceled. So if any bulls still try to bring up cup and handle stuff to you, let them know Uncle Charter said it's been canceled as long as below 365. Now, if it stay above 365, we need 367 recaptured. Give us that false breakdown setup. That false breakdown setup will trigger longs, putting 369.5 back in play with 370.5, and then the 372 to 372.8 is zone up above. All right, that's the June highs. Okay, 365 fails, bearish. 367 recaptures, bullish. Are we on the same page, guys? Please hit the like button if we are on the same page. Hopefully, I'm gonna get a lot of likes today and see that my people, my niece and nephews, my fellow auntie and uncles, we're going to do some good stuff Monday. Now, IWM recaptured 183.3. Guys, I mentioned if it recaptured, that's bullish. Look to long. All right, we did get some selling pressure end of the day as well, but we did close above 183.3, okay? So to show follow through, 183.3 must defend and hold as support on any back test, and it needs to go and hit 187 and actually break above it. That's my 61.8 fib level for IWM. Break above 187, we're likely heading to a new 52-week high for the 52-week high for IWM is actually around 199. I don't think it's gonna get there that soon, but it should definitely hit 192.45 if 187 can recapture. Now, if 183.3 fails, guess what? False breakout, false recapture, will likely heading down lower. All right, 181. What to 0.8 to 179.6, and my yellow trend line is at 178. Could get a bounce at around 178, but you know, if it gives a dead cat bounce and it breaks down again, that is very, very bearish. All right, Tesla still consolidating below my my multi-month trend line here. Okay, it's consolidating. We'll see if it's trying to consolidate to break out or consolidate and get ready to rug pull. Okay, still we need the breakout of 284.6s for a breakout of the multi-year trend line. Okay, resistant is at first resistant is at 279.5, 281, and then 282.5, and then the breakout is at 284.5 to 285 zone of the multi-year trend line. Okay, now support, I have support at 274, 272.5. If that fails, we'll likely go into for a gap fill. But keep in mind the gap fill is all the way down to 261.8ish. But we'll take it one level at a time with 268.5 and 265 in play first. Okay, so bearish below 274 and 272.5. Bearish, bullish if it can recapture 278 and 280.5 to trigger more upside. Guys, cut the noise. Add those levels on the charts that I mentioned and watch the behavior, okay? Apple here is in consolidation mode still as well. If I go to a smaller time frame, yeah, let's see if this will work. Yeah, that looked like a false breakout if I do it like that, because it got a test here. 1, 2, 3. But the high of Friday was up here, so I guess we could do it like this. Boom. All right, we got 2 touches, not official yet, but it's more like something to track. Okay, in order to get 3 touches, there gotta be 2 touches. So we got 2 touches right now. This will put resistant right around 192. I already had 192 as a resistant anyways, but based on this, it just gives 192 again. Cool. Long above 192. Support right now is at 190 with 188.5 below that. The pink trend line support, 2023 trend line, is at 185.3. It's sloping up a bit. Okay, below 185.3 is when the bears truly take over. But you know, above that, if you want to be a counter trend trader, I don't recommend it. But if that's your thing, watch for these breakdown of support and play it level to level. Be defensive with your gains. Okay, 190, 188.5, and then 185 ish. Okay, above 192, long. We're likely heading up to 194.5 and 196 next. Meta. We had that false breakout setup on the higher time frame daily chart. I mentioned it stayed bearish below 293.6. Friday's action was a little tricky with that bounce up, but end of day it showed follow through in favors of the bears. Yes. Okay, so next support is at 280. If bears want a deeper downside, I'm talking rug pull style, break down 280. We're likely heading down. Okay, 285 and 281 ish. And then 277.5-ish below that, okay? If you're a bull, if you want to see it get canceled, you need price action to defend above and stay above 290 and recapture 293.6. If it can recapture 293.6, we'll likely head back up and test 298, the previous pivot high here from last week. All right? NVDA, beautiful trade setups as usual on NVDA. If you guys are trading this using Uncle's levels, let me know if it's been working. If not, well, maybe it's your risk management, okay? Now you're probably thinking, Uncle, but maybe it's your levels. Well, I don't know. I find success, and a bunch of my Discord members found success using these levels. At the end of the day, guys, these levels are just tools. It's like a hammer. The hammer is only as good as the one who wields it. Alright? But I tell you this, if you're not good at risk management, you might want to avoid trading NVDA because this stock is so volatile. Now what we see here, white trend line, broke it down, and then we tested it as a resistant rejection. Alright? Nice rejection, and it bounced off my 424.2-ish level. That's a fib level here. Yeah, that's the fib level, 424.24. All right, so here's the deal here, guys. If you are a bear, you want to see price below 424, break that down, break below 422, and definitely break below 418. This is around 418. As you guys see, this inverse head and shoulder. Yeah, that shoulders was around 418. So if we break that down, we cancel this head and shoulder. All canceled, and it's very bearish. We're likely heading down to 414.5 or lower. Probably lower. I'm favoring lower. Okay? Now, as long as above 424, guys, I would stay long still. Watch that resistant breakout at 425.5, 428, 428. And then the double top is at 432-ish. If 432 clears, double top is canceled. Now keep in mind, guys, with these double tops, it's very tricky because there's an area. You remember the areas of liquidity, okay? Very likely the market's building up some liquidity up there, and they likely want to go hit it. All right, we could take advantage of that, play level to level style, and do not be greedy, okay? So below 424, bearish, that's my equilibrium level, okay? And above it, stay long bias with upper targets in play. Hope that makes sense. Now, today I want to cover Amazon, and it's looking interesting here. Can I duplicate? If I clone this, boom. All right, cool. We got a rising channel here, okay? I got the 1.68 fib level at 130. If that clears, in my opinion, I would long it 130, put in 132 and 134 in play, okay? Longs above 130. Now, based on this rising channel, breakdown is at 128. So if that breaks down, shorts below 128 with 126.9, 123.8, and 120 in play. Fibonacci levels, guys, for AMZN. And here is the VIX. Now, before anyone say anything about the VIX talking about it's bearish, look at this blue trend line that I got. We broke it out recently, and VIX came to back test it as support. Did find some buying pressure. So not quite bearish just yet. The confirmation would be to break down 14 on Monday. Break down 14, we go back below this trend line, and we're likely heading to a low. Follow the price action. Don't argue with it. Now, if it bounced from here, I'll trust the bounce. If it recaptures 14.7, put in 15.5, 16.7, and 17.7 back in play, okay? So below 14, I would be bearish. Above 14.7, I would be bullish. Now, here is the dark pool order. 2.1 billion came in at 439.7. We can just round that up to 440, guys. It's one of my resistant levels anyways. You can add, if you want to be specific, you can add that level to your chart, label it dark pool order, or you can just watch the 440 level like me, long above 440. If not, watch that breakdown of 437. We're likely heading lower. Okay? Now, here is the option flow. Filter for 500K premiums or above. At the filters here, it's overall bearish, but we're going to look at 1 month out. And it's overall bullish for the short term. QQQ bullish for the short term. IWM bearish for the short term. Tesla bullish, really bullish for the short term. Apple bearish for the short term. NVDA bullish for the short term. Amazon nothing. And the VIX nothing. Alright, guys, thank you guys so much for watching. I hope you guys are having a great weekend, and good luck on this upcoming week. I'll definitely be making about 4 to 5 videos this week. Hopefully I can assist you guys. And if you do want more content from Uncle Charles, because you don't want to, or you can't wait for the aftermarket analysis, definitely consider joining my Discord. I would love to serve and connect with you guys there. Peace.